The fight for control of Australia's second biggest retailer is hotting up after a $2 billion share raid on Coles. The Perth-based Wesfarmers is seeking talks with the supermarket group after picking up an 11% stake. It could set up a showdown with the private equity consortium, which last year made 2 hostile bids for Coles.
Just 1 week ago, Coles senior management were delivering a grim profit forecast. Today, investors have something to smile about as the sale of the company gathers pace. The Perth-based conglomerate Wesfarmers, which is best known for its Bunnings hardware chain, has bought an 11% stake in the retailer, worth more than $2 billion.
This is exactly what Rick Alert and the board wanted, and that is a competitive process for the sale of the Coles Group. And that's exactly what we're going to see now. Things just got very interesting with a second player at the table.
Last year, Coles knocked back 2 takeover approaches from a private equity consortium, the second at $15.25 a share. Wesfarmers has topped that by more than $1, paying a 2% premium on yesterday's closing price.
They put their foot in the door, they put their money on the table to say we want to be part of this deal, and they've had to do that at a price which is going to make sense. They don't want to be gazumped at any point.
It's understood that Wesfarmers is part of a consortium including Macquarie Bank and the private equity firm Pacific Equity Partners. Wesfarmers is seeking talks with Coles, but hasn't said whether it wants the entire group or particular businesses like Officeworks.
Wesfarmers would see the bits and pieces of Coles that they like as with a potential to adding their management, their skill, their buying, their purchasing, their whole modus operandi to improve that value.
Coles and Wesfarmers spent the day in a trading halt, but there's expected to be a flurry of buying when they return to the market in the next 48 hours. Neil Woolrich, ABC News.